China's exports jumped 12.4% in March on an annual basis. And OPEC downgrades its global oil demand projections for 2025. You're watching Qnews and this is the Economic Bulletin. We'll start off with the United States as the Federal Reserve Bank of New York survey has shown that consumer worries about inflation, unemployment and the stock market have intensified as the global trade war escalated in March. Respondents expect inflation to reach 3.6% a year from now, the highest level since October 2023. Concerns about the labor market have surged, with the probability of a higher unemployment rate rising to 44%, the highest since April 2020. Additionally, only 33.8% of consumers expect the stock market to be higher a year from now, the lowest since June 2022. While five-year inflation expectations edged down to 2.9%, food prices are anticipated to rise by 5.2%. And rent expectations increased to 7.2%. Gasoline prices are expected to rise by 3.2%, a slight decrease from the previous month. US President Donald Trump has announced that he will reveal the tariff rate on imported semiconductors within the next week, indicating flexibility for some companies. This move suggests that the recent exclusions of smartphones and computers from tariffs on China may be temporary. Speaking aboard Air Force One, Trump stated that they want to make their chips and semiconductors and other things in their country. He did not confirm whether smartphones would remain exempt, but emphasized the need for flexibility.
The chair now directs the Sergeant at Arms to restore order.
South Korea's acting president, Han Duck-soo, has stated that US President Donald Trump appeared to have directed talks on tariffs to begin immediately with South Korea, Japan and India. The acting president had explained in detail South Korea's stance on tariff negotiations to Trump and that he had been satisfied. Han said during a meeting of the Economic Security Strategy Task Force. Han also expected a video meeting between the U.S. and South Korean officials on the proposed Alaska liquefied natural gas project soon. Earlier, South Korea has shown interest in the Alaska liquefied natural gas project, which is part of Trump's bid to boost U.S. gas exports. Senior Indonesian ministers will travel to Washington to meet their U.S. counterparts to offer significantly increased U.S. imports and investment proposals as part of their negotiations to avoid hefty 32% U.S. tariffs, which has been paused for 90 days. Suswonjo Mogariso, the senior official at the Coordinating Ministry for Economic Affairs, said a proposal to buy U.S. goods worth $18 billion to $19 billion aimed to cover the U.S. trade deficit with Indonesia. Toduta Pasaribo, the Deputy Minister for Investment, also stated that Indonesia may also propose that state firms invest in U.S. oil, gas and information technology sectors. A government spokesman has revealed that that Thailand's finance and commerce ministers will lead a delegation to the United States to negotiate relief from planned heavy tariffs. An advanced team led by Finance Minister Pichai Chunhavaria will depart for the U.S. on Thursday to meet with private sector groups. Commerce Minister Pichai Naripathapan will join the delegation later. The Thai officials expect to engage with U.S. government representatives on Monday, April 21st. Thailand is currently facing a 36% tariff under U.S. President Donald Trump's trade measures and hopes to utilize a 90-day pause on the levies to prepare an appropriate response. Bank of Japan Governor Kazuo Ueda had warned that global and domestic economic uncertainty has increased sharply due to U.S. tariff policy. Ueda also said that the Bank of Japan will guide monetary policy appropriately from the standpoint of sustainability, achieving its 2% inflation target, while scrutinizing economic, price and financial developments without any preconception. China's foreign ministry stated that no country should bypass international laws to authorize resource exploration in the seabed. His remarks came after the Trump administration has drafted an executive order to enable stockpiling of deep-sea metals found on the Pacific Ocean seabed to counter China's dominance of battery minerals and rare earth supply chains. Earlier, China completely shut down its exports of 7 rare earth metals and magnets made using them to the United States. The Customs Administration has reported that China's exports jumped 12.4% in March from a year earlier as companies rushed to beat increases in U.S. tariffs imposed by President Donald Trump. Meanwhile, China's imports fell 4.3%. It said exports from the world's second largest economy rose 5.8% in the first 3 months of the year from a year earlier, while imports sank 7%. China's trade surplus with the United States was $27.6 billion in March as its exports rose 4.5%. It logged a surplus of $76.6 billion with the U.S. in the first quarter of the year. However, the biggest increases in exports were to China's Southeast Asian neighbors, which saw exports from China jump nearly 17% in March from a year earlier. The Egyptian presidency has revealed that Egypt and Qatar agreed to work towards a package of $7.5 billion in direct Qatari investments. During a visit by the Egyptian President Abdel Fattah al-Sisi to Doha, he called upon Qatari companies and businessmen to expand their investments in Egypt. He highlighted the diverse investment opportunities Egypt offers in an array of spheres, including the communications and information technology sectors, transformative industries, new and renewable energy, and tourism. The Egyptian Minister of Investment and Foreign Trade, Engineer Hassan al-Khatib, also stated that Egypt has invested approximately $550 billion over the past 10 years to develop the infrastructure. CEO of the General Authority for Investment and Free Zones, Hossein Heber, has witnessed the signing of 4 investment agreements between the Egyptian and Saudi business communities across sectors including investment promotion, food industries, solar energy, metal industries, and real estate development and marketing. The first MOU aims to attract foreign investment to Egypt in sectors such as poultry production, agri-food processing, education, real estate development, and the export of Egyptian products to global markets. The second MOU outlines plans to establish a 10,000 square meter factory for aluminum cladding panels with an annual production capacity of 3.6 million cubic meters. The third MOU focuses on the marketing, sale and installation of solar panels and accessories in both Egypt and Saudi Arabia. The fourth Memorandum of Understanding outlines joint cooperation in managing and developing real estate marketing and development operations. Britain has expressed confidence that it could secure enough raw materials to keep the blast furnaces burning at its last maker of virgin steel. After the government seized operational control from its Chinese owners, there was concern the government would not be able to obtain enough iron and coal to keep the furnaces. However, Keir Starmer's spokesman said the two shipments containing iron ore, pellets and cooking coal had docked at a local port, with a third on its way. OPEC has significantly downgraded its global oil demand projections for 2025, citing weaker than expected first quarter data and escalating U.S. trade tariffs that threaten economic growth worldwide. The Organization of the Petroleum Exporting Countries, in a monthly report, said world oil demand will rise by 1.3 million barrels a day in 2025, down 150,000 barrels per day from last month's forecast. OPEC also lowered its forecast for world economic growth this year and the next. OPEC warned that trade tensions have introduced higher uncertainty to the short-term global economic growth outlook. Moreover, Goldman Sachs has forecasted a decline in oil prices through the end of 2025 and into 2026, citing rising recession risks and increased supply from the OPEC Plus group. The bank anticipates that Brent and West Texas Intermediate oil prices will average $63 and $59 a barrel, respectively, for the remainder of 2025. And further decrease to $58 and $55 in 2026. The bank's outlook reflects a weak growth forecast amid ongoing global trade tensions, predicting that oil demand will rise by only 300,000 barrels per day between the end of last year and the end of 2025. Oil prices held steady on Monday as exemptions for some electronics goods from U.S. tariffs and data showing a sharp rebound in China's crude imports in March were outweighed by concerns that the trade war could weaken global economic growth and dent fuel demand. Brent crude futures were flat at $64.76. U.S. West Texas Intermediate crude were down 0.2% at $61.37.
Global oil demand is under pressure as OPEC slashes its growth forecast and Goldman Sachs warns of a potential price plunge, with escalating trade tensions and recession risks shaking the energy market. OPEC has revised down its 2025 global oil demand growth forecast, citing weaker than expected data for the first quarter and rising trade tensions. In its latest monthly report, the oil group now expects demand to rise by 1.3 million barrels per day next year, 150,000 barrels fewer than previously projected. OPEC also lowered its global economic growth outlook for both 2025 and 2026, warning that escalating tariffs have added more uncertainty to the global economy. Meanwhile, Goldman Sachs expects oil prices to fall further, pressured by the threat of recession and increased output from OPEC+. The bank forecasts Brent crude to average $63 per barrel this year, falling to $58 in 2026. Goldman also cut its global demand outlook for late 2026, slashing expectations by 900,000 barrels per day due to the intensifying US-China trade war, with Beijing imposing 125% tariffs on US imports. Analysts warn of surpluses reaching up to 1.4 million barrels per day in 2026, a level that could send Brent prices tumbling below $40 in extreme cases.
And to shed more light on this story, we're joined from Amman by the economist and specialist in oil and energy affairs, Mr. Amir Shobeki, to discuss the latest developments in the oil market and the impact of the trade war on it. Welcome, Mr. Shobeki, to the Economic News Bulletin. Now, to what extent are the rising US-China tariffs impacting global economic growth and oil demand in specific?
Greetings to you all, and I think that this region that has the biggest impact on the market, the trade war between China and the US. Today, the market is still evaluate and weigh such an economic war impact on oil. The oil has lost 11 US dollar per around 15%, ranging about 64 US dollar per barrel. All this mainly because of the concern of the oil demand that might go down in case of the decrease of the economic growth due to the tariffs and the trade war. In addition, OPEC Plus announced about the offer surplus in the market in around 411,000 barrels per day. All this region led OPEC to decrease its outlook to the growth of the demand from 1 million to 450,000 barrels per day to 1 million to 300 of the demand growth per day. So I think the decrease will be more due to the projections of the continuation of the trade war between US and China in particular.
Well, sir, could the continued trade tensions, derail the post-pandemic economic recovery in key markets? I mean, the oil market, how vulnerable is it to this tariff war? Is this a healthy phenomenon?
I think that the world is heading to an economic deteriorate might exceed what we've seen of the COVID-19 pandemic. We'll talk about the total trade exchange around 17 billion US dollar between China and US, let alone the tariff imposed in the car or the automotive and the steel imported to USA. And I think this suspension throughout the 3 months would constitute an uncertainty state in the market, not only in the demand growth, but also for the economic growth and maybe the inflammatory recession that would come out as a result of the tariff war along with the trade war between China and US.
Other than the tariff war, what other key factors that led OPEC to revise down its 2025 oil demand forecast? How significant is this 150,000 barrels in the broader context of global?
of the decrease of demand for the most oil consumers, such as US, along with the biggest oil import, such as China. This is the biggest trade war in the world that would really constitute 40% of the world economy. That would affect at larger scale of the most oil or energy sources such as the oil. I think also that the production that we are witnessing within OPEC that would to the or call upon it, the increase of the production for those countries that produce more than their shares. So if they have agreed upon on the Iranian nuclear programs and allowed the current prices that came aligned despite with the productions of Iran to the oil and selling around 1,800,000 of the oil production in the market.
Mr. Shobeki, on the other hand, how do you explain Goldman Sachs' bearish oil price outlook through 2026? Are the projected large oil surpluses realistic?
I think the Goldman Sachs outlook came very optimistic to the rate of Brent price around $59 to $62 per barrel. I think it's around $64 in this year. It is a very optimistic outlook, and I think the prices should be decreased compared these rates if we expected the continuation of the war, the trade war between the US and China, along with the protectionism policy of Donald Trump.
From Amman, that was the economist and specialist in oil and energy affairs, Mr. Amir Shobeki. Thank you very much, sir, for your insights. Ladies and gentlemen, now we move on to the latest developments in the stock markets. The International Monetary Fund has reported that major geopolitical risk events, including trade tensions, can trigger significant corrections in stock prices, leading to increased market volatility that threatens financial stability. The IMF reported a surge in risk factors since 2022, including conflicts, trade restrictions, and military spending, without citing specific events. Global stocks typically fall 1% monthly after major crises, with emerging markets dropping 2.5%. Conflicts like Russia-Ukraine in 2022 caused steeper 5% declines. The IMF advised banks to bolster capital and liquidity, urging stress tests to mitigate geopolitical shocks. In the markets, global shares signaled positive performance after the White House announced that imports of Chinese-made smartphones and some other electronics devices would be exempted from tariffs. The future for the S&P 500 rose 0.29%, and that for the Dow Jones Industrial Average hiked 0.22%. In Europe, Germany's DAX went up 2.85%, and the CAC 40 in France jumped 2.37%. Britain's FTSE 100 surged 2.14%. And in Asia, Tokyo's benchmark Nikkei 225 rose 1.18%, Hang Seng jumped 2.4% and Shanghai's composite went up by 0.76%. These were the news we have for now, but here's a reminder of today's main stories. The New York Fed survey reveals Americans expect unemployment and inflation to rise. China's exports jumped 12.4% in March on an annual basis. And OPEC downgrades its global oil demand projections for 2025. This concludes our economic bulletin, but please don't forget to follow Q News on YouTube, Facebook, X, Instagram and TikTok at QNewsEGY to stay informed. I'm Henny Saif. Thank you for watching.